I've been working, so I haven't had time to do a video. I thought there was going to be a negative reaction to with the interest rate hike. I thought there would be a lot bigger sell-off, but there wasn't. But the markets have been fading lower. But the biggest concern I see come Monday, that is your financials. We have a very thin cloud that the thinner the cloud, the easier it is to break below it. And we are going into Monday with that situation. This is a scenario where you can tend to get huge opening gap downs on the market. So it would not surprise me one bit to see the Dow down triple digits pre-market Monday morning. We'll see what happens. But we have above average volume hitting the financials, and we are breaking out a monthly value going into the weekend. So this is a very bad scenario for financials. Another correlation I want to point out here is the XLF versus the SPY. So far, the XLF, since the election, has been outperforming the S&P 500. Well, we came down last week and we tested that correlation. And I think this week we're going to start seeing the financials underperforming the S&P 500. A very good gauge of people buying insurance going into the weekend. And we haven't seen insurance buying into a weekend for quite some time now. But this is typically, has been for quite a while since the election, soon after the election, that is. You would short the VIX at these high levels here, but I do think there is a significant change happening in the volatility here, and you're going to start seeing an uptick in the volatility. And we did see significant VIX protection call buying all the way up to the $20 VIX Friday. So just keep that one in mind. One of my favorite trade ideas, which I looking at this weekend, that's buying puts on the SVXY. This is the inverse of the VIX. It rallies higher as the VIX goes lower. So if you're thinking volatility is going to go up, I'm thinking buying puts on the SVXY, which has been in a very long-term uptrend. Right here, right now, is not a bad idea at all. It is breaking the primary uptrend as of close Friday. Another thing that is very concerning right here, and that's a rotation back into bonds possibly. We have a very thin cloud here, so it's anybody's guess what could happen, but we are trying to push out above this cloud. So if bonds continue to catch a bid here, it is going to be devastating for the financials. And if you look at this correlation between the S&P 500 and the bonds, you can see right here we are trying to put in some sort of flag pattern at the 50 SMA and trying to break out higher here on the bonds, and it really looks like we're going to get a sustained bid in the bonds in the short term. If bonds were to catch a bid here, the one bank that's most susceptible to interest rates, that's Bank of America. And this is another situation where you have a very thin cloud, and we've already broken the primary uptrend and below the 50 SMA. So things are not looking great for Bank of America. So just keep that in mind. I do think this scenario is going to play out here. Now on the regional bank front, they're also highly susceptible to interest rates. And PNC, Principal Financial Group, has been a high flyer. And this is it's at the bottom of the cloud right here, right now, threatening to break out of the cloud here anytime now. So that's something to keep on watch. You're below all your signal lines and you're trying to break out of the cloud. So, and we all of a sudden are getting at or above average volume on this stock here. And keep in mind, your regional banks have a lot of impact on your Russell 2000. And what I'm seeing here is because we're below the cloud and we've broken the primary uptrend, that this is actually a bear flagging pattern for the Russell 2000, and it looks like we are going to set for lower prices here soon. And part of the Trump trade was the small and mid caps were catching all of this action based off of all these expectations out of Trump. And what I am seeing here on a very thin cloud, we have broken down on the small caps here into bearish territory, and now we're bear flagging out on the small caps. So this is even more bearish for the small caps and the Trump trade, in my opinion. Okay, your transports will tend to lead the market, and as you can see, your transports are even weaker than some of the other sectors, and we are testing the primary uptrend. There's a primary uptrend here, and we're closing right on that as of Friday. And transports are not looking healthy at all. We are breaking out of monthly value. We have broken out of monthly value, correction, for the past 2 months, and it looks like we're set for lower prices. Now our oscillator is oversold here, so there is a chance for a bounce on our transports, but I want to show you some other stuff here. What has me concerned, FedEx just reported earnings, and it had an initial pop. Well, in just 3 days' time, we are already breaking out of this month's value on the FedEx. And this is the major holding in the transports. So just keep this on watch. And the oscillator on this one here still could have, it's not oversold yet, so in my opinion. So I do think there's more downside potential in our transport since we are below the cloud. Another major holding in our transports is the Union Pacific Railroad, and it is closing below the 20 SMA as of Friday, and we do have room for lower on this one here too. And if you look on a weekly basis on your Dow Jones Transports, we broke away from the 20 SMA last week. So this is even a more bearish pattern. And we do not even have Ichimoku support for quite a ways lower. So this one here is even a more bearish look on the transports. And you can take a quick look at the Dow Jones US Railroads Index. And what I see here, in my opinion, is a bear flag situation. We're just dojing out here at a support level with really no sign of the MACD turning quite yet. So I do think we're probably going to come down here and fill most of this gap. Another area to start keeping a close eye on, and that's in our material space, the chemical sector. Starting to show some, we're breaking this trend potentially on the uptrend, just keep this in mind here that we're starting to see a little bit of weakness in the chemicals. It's still in a bullish pattern, but we are breaking the uptrend. USO could be another driving force in the markets. We do have considerable value, volume value at this point, but we were pushing lower prices last week. Now I know the price of crude does have some support at this level, but the energy sector itself, I think, is going to be weaker than what crude itself is going to be here, in my opinion. We have room lower on our oscillator, and it looks like the markets are wanting to come back at these prior levels on the energy sector, in my opinion. And then in your oil services sector, I don't even see any real support at these levels at all. I do think there's a, there's still considerable downside here, even though the oscillator is oversold at this point. I don't see any lasting support at these levels. To wrap up, I'm going to stop off with WBA, this Walgreens Boots. Their earnings are Monday morning. They are oversold right now going into the numbers. So the really mild weather and stuff, they're not expecting very good results out of Walgreens Boots. And CVS has been having the same issue. And also, I want to show you one last chart. The news is coming out tomorrow on Walgreens Boots, and if they have very bad earnings results, this is probably going to impact your drug pharmaceuticals, your Eli Lilly, your Pfizer's of the world. And as of Friday, we are crossing our support line on this sector. So I am thinking we're going to have relative weakness in the pharmaceutical space come Monday. That's everything. Catch you later. And make any comment you can at the bottom. Like the video. And I appreciate all the feedback I can get. Thanks.